Hey, everybody. Welcome to another exciting episode of Real Talk with Matt. And today we're going to be talking about some exciting things, rates, refinancing, and why timing matters, especially in this market right now. And I feel like this is an important episode to get out there to everybody so we could talk about some things so you can prepare yourself for buying in the future or refinancing if you bought in the last 2 years. So we're going to talk about buying power, mortgage rates, refinancing. Rates are at their lowest level since October of last year. Let me say that again. Rates are at the lowest level since October of last year. So we're almost in a 12-month in a slide down. The lowest it's been. Is now the time? Let's break it down. So I want to start off the first segment talking about the current state of the mortgage market. I really wanted to focus on some stories and some anecdotes to some things that I'm dealing with and have been dealing with over the last couple of years. But just a quick story. So recently, after the rates have dropped, I've been talking to a lot of clients, past clients that I had, and clients that I'm working with on interest rates because it makes a big deal on how much money, how much of a house you can buy. With that being said, is I wanted to talk a little bit about how much time it's going to take for the rates to actually drop in a longer form of period over the next, if we look at a year, 2 years, what they may be, if the track were to continue. Things just don't change overnight. So I've been working with a couple, and I just want to kind of give a little story here, probably for about 2 years now. And they've just been waiting. And, we had a great conversation the other day, and we were just talking about, what if we bought 2 years ago with the rates being a little bit higher than what they are today? What would that be different from today, waiting as we still continue to wait for the rates to drop to a more reasonable level? And the reality is the rates just don't change overnight, because even if they bought the house a year, 2 years ago, they would still get probably the seller concessions and everything else that goes in with it. However, you don't have to wait and try to find the perfect home later and then go against a bunch of people. As rates drop, you have a ton more people in the market looking to buy the house, and you could refinance. Just this week alone, I think I have about 6 people that I'm working with on refinancing that bought 2-3 years ago when rates were at their all-time high, which was in upper to mid 7s for conventional loans and 7-ish for FHA loans. And now, and I'll show you later just how much it's dropped, at least a full point since then. And the opportunities now is to refinance. We do it on our own terms, and I have lots of specials and things I could do to help with that. So I wanted to make sure that I put that out there, is that you're going to get a lot of mailers and stuff that, say like, oh, we could get you a 4% rate, whatever. And I always tell people, just watch out for the bait and switches out there, because there's a lot of it. But, everyone who's on we'll call it the fence, the ballpark of waiting, well, you're just going to keep waiting forever, because there's no exact perfect time to buy a house. And I've said it before, is I've never bought a house at a low interest rate. However, I've taken advantage of refi opportunities several times. And even the house that we live in now, the interest rate was probably 5-6%. COVID came, hit hard, and next thing you know, we're at 2.25%. And we'll probably never see that again unless a total shutdown of the world happens again, which I highly doubt. However, but if we get more reasonable rates of where it was pre-COVID times, then I think that's going to be a big thing. But yeah, so if you kind of look at things, and I have some data up here, so I'm just reading it. So as I said, the rates just don't change overnight. Definitely not. 6 months ago, the average 30-year fixed rates were around 6.65%. Today, it's about 6.25 to 6.5%. Now, interest rates that you see, I'll be honest with you, I don't talk about interest rates too much, only because there's like a million disclaimers that go involved into it. This is just taking, let's just say, an average credit score on conventional loans, probably 720. The market is just going to kind of tend up. So you're going to have more demand. Fortunately, right now, we still have a lot of supply. So that's a good thing. But as supply goes down, demand goes up. That pushes prices up. So really the lesson here and the moral of the story is, if we can make the numbers work today, let's get you in a home. I've done it for myself. I'm still waiting to refinance my second home up in Blue Ridge, Georgia. It's at like 7%. I'm waiting for it to probably drop a whole point. It's getting close. So, you just got to do it now if you can, so you get the best deal, and then worry about the refinance either. And we'll help you make sense financially. We can always do that for you. And often rolling, if it comes to a refinance, Hopefully nothing out of pocket. I don't like to use the term free refinance because there's no such thing. You still got to pay closing costs, but nothing out of pocket refinance. You can roll them right into the loan. So I'm going to put this chart up. But if you can see, if you look at rates over a 6 month trend, it's really not life changing. Buying when you're ready matters more than trying to time the market. And I say that a lot, especially for those out there that are trying to sell their house to buy the new house. That time is incredibly hard to do. It's incredibly hard because you don't know who wants to buy your house. And if you're making arrangements to buy another house, it might not work. And been there before too. But timing is kind of tough in this kind of market because you got a lot of uncertainty, unknowns, if you will. But again, I think this is positive because we're going in the right direction that we've been waiting for over the last 4 years. So right now, I'm getting bombarded with refi opportunities, and for a good reason. So between 2022 and 2025, nearly 2 million loans were originated with rates above 7% in the country. That's a lot of families paying way more interest than they probably should be paying or need to be paying. But at the time, that was what it was. So what we're doing here at Anchor Home Loans is I've set personally my origination fees, which are built into the rates, at a lower than it is on a purchase. So what that does is that allows you to escape those 7% loans, and we could get you probably on average into the low sixes. And that's what we've been seeing. And on government loans, in some cases in the fives. Okay. So that's what I'm doing. I'm doing this to help my past clients, but also help brand new clients that are out there wondering what we can do. And the reason why I did that is because refinances are typically easy. And I want to be able to help people maintain the home ownership dream and also be able to utilize, the lower rates to either maybe cash out a little bit if they have debt, vice versa, whatever it is. I'm offering free consultations. Send me an email, matt@anchorhl.com. And I love to try to see a scenario and see how we could piece it together. But there's no perfect timing. It's all about the math, right? So if we talk about refinancing, if it saves you enough money monthly and the break even on the cost is within a time period that makes sense, you're going to stay in your home because some people, why would you refinance it? And if you plan on selling in 2 to 3 years, you'll never make that money back because the closing costs are typically 2.5 to 3% of that loan amount that you're rolling into the loan. So you might save a couple $100, but you're adding into the loan. So when you sell your house, you're not saving anything because that's more debt. So I want to say this. I actually care about you as a client. I'm not trying to make money and say, yeah, let's just refinance it because I get talked to all the time and I'm talking to people and friends and they're asking about refinances. And I'm like, it doesn't make sense. And yeah, I can make money off that, but why would I? Why would I want to make money off you to do a disservice? That's just not who I am and how I've ever been. So my goal is to make sure it makes sense, right? And do not fall for the flashy mailers that compromise or promise you a magical low rate. Because guess what? We all pretty much have the same rates. It's about how much you're going to charge, and it's coming out of your pocket. And honestly, it's a bait and switch. And I think it's really crappy. So I had somebody give me a flyer the other day from a mailer, and it was like 4.5%. I'm like, yeah, that's a rate, but it costs $20,000 for that rate. Who in their damn right mind would ever do that? It makes no sense at all. So it's something worth exploring. And I've been saying this on social. If you're above 7% today, it's absolutely worth exploring. Usually I tell people you want to be about a point, maybe a point and a half. That could save you a couple $100 a month, but also put the money back into your pocket immediately. And a lot of things go into factor with this. So I just want to make sure before we go on to the last topic here is credit scores are very, very important right now. They're always important, but very, very important right now. The better credit scores, the better loan to value. So the more money, equity you have in the house are going to get you the best scores. Okay. When it comes to refinancing. So I offer a free credit app. I call it the Credit Home Journey app. I have 2,000 seats available. I pay for it monthly. The soft pulls. If you're interested, send me a DM, send me an email, matt@anchorhl.com. I'd love to give it to you. I just connected 5 new people today with it. They're on the journey. They want to know what they can do to improve their scores. It has free simulator, does soft pulls, keeps you up to date. It's like, I don't know, Credit Karma sucks, but it's like more like My FICO and some of the better ones out there. But it has data and it's curtailed to buying a home. All right. Because you can put in there your income, stuff like that. It will kind of figure out your debt to income ratios. I'm actually going to do a webinar. So if you're interested in joining, let me know as well. Probably going to do it next week and just kind of talk about the program. And if you're a realtor out there, I could create you your own link, which is good. It brands you just like me. I'm branded into them and it's a one-stop shop. That's what I'm all about. I've always been that way. One-stop shop. There's no reason to have 100 different people doing 100 different things. Just doesn't make sense. Not today, not now. Okay. So just finish it off. If you're at a high rate and you're thinking about refinancing, before you call your servicer, before you call Tom, Dick, or Harry that sent you a mailer, reach out to me. Do a free consultation. I'll go over all the things. All I really need is estimated credit score and basically your mortgage, statement, and I can do the rest from there. It's very easy to pull data these days. So real good stuff there. So the last part, let's talk about buyers. Buyers, I love buyers. Obviously, I don't really deal with sellers. I'm a mortgage broker, not a realtor, but I want to talk about how important this is. Okay. Especially to someone like me. I have helped probably 700 people in the last 5 years get a mortgage, do a HELOC, do whatever. Okay. Transactions. And I've seen rates as low as 1.9 and as high as 10 or 11% doing hard money. Okay. I want to let you know one important thing. That's why I want to get this message out there. If you've been looking and been kind of on the sidelines, maybe you have a pre-approval from me, maybe you have it from somebody else. With these rates dropping, two things happen. Okay. Number one, your buying power increases. Number two, if you stay what you're pre-approved for, payment decreases because rates drop. Okay. To give you an idea, for buyers, this drop in rates recently, if you look at it, let's just say about a year ago, if you were pre-approved, every 1%, and it varies based off loan amounts, but it could increase your buying power 13, 20, 25,000. A lot of variables with debt and stuff like that. But think about that on the same monthly payment. So every time the rate drops, your buying power increases. That's why during COVID, with rates in the twos, you can make 50 grand a year and buy a $400,000 house. Now you'd be making $70,000, $80,000 to buy that same house. Okay. So the rates have a very, very big thing to do with this. And the difference between a starter home, you know, and that's the difference between a starter home and maybe something that you could grow into. Right. And that's the thing you got to think about. If you're looking at houses at 300, because that's your max pre-approval, and then rates are dropping, now you're pre-approved for 340, 350. Well, maybe that has a pool. Maybe it has an extra bedroom. Maybe it has an extra bathroom. Maybe it has a 4-car garage. Maybe it has a bunch of different things that you could use for your home. And then that might keep you longer in the home as opposed to getting a starter home for 2 to 3 years and then maybe changing things after that. So just something I wanted to throw out there, how important it is. For sellers moving up, I think this is something important. So sellers, I get it. A lot of you are sitting at the 3% rates. We're rock and rolling. We always do. My processor, Jen, she's freaking amazing. Probably one of the hardest working people I know in this industry on the operations side. So she just goes through everything, plows through everything. We get everything done quick. But I just want to say, like, be careful who you work with. Right. And if you're a realtor out there and you get a pre-approval from, a credit union or bank, like, I'd ask some questions. They get one option, that's it. And you have to deal with that. You can't contact anybody. You can't get a hold of anybody. We started off our call at 7:30 at night, application in, had the contract already. And then we were approved the next day with conditions like 3, and we ordered the appraisal, and that's it. We're done. We're just waiting for title, which is awesome. So I'm not going to complain about that. But at Anchor Home Loans, we have dozens of lenders that we shop, and the whole idea is to get you the best deal possible. And they're all competitive. They're all great. And I have different perks, being a top 1% loan officer in the country, year after year after year, you get certain perks, and the perks work. Works that perk, perks that work, whatever you want to call it. And I'm very proud of that. And I wouldn't be able to do it without my realtor partners. You guys are my everything. You guys are, my favorite people. And I love talking with you. I love chatting with you, and I love helping your clients. And I would say overall, I've never had a bad experience, at least brought to my attention. So you always know that we have your back, and customer service is always number one. Number two, I try to make it as cool as possible. I'm not going to be here wearing a fancy suit, as you can see. I'm all about the people. And that's what I learned my entire life in working in corporate America, and everything else is all about the people. And if you treat people right, you're going to get things done. That's my message there. So here's the bottom line: rates are lower than they've been nearly in a year. Okay. Proven. We see it. We know it. But to make this a winning strategy, don't wait. If you really want to buy a house, we can make it work. I'm telling you, we can make it work. All right. You just got to follow the plan and trust me. I know you don't know me, or you may know me, but you got to trust me. Because if it doesn't make sense, I'll tell you it doesn't make sense. I have not a financial background on school, but I mean, I pretty good financially. I'm good with my everything financially. So that's my job. My job is to make sure you don't go in a rut so that way we can help you. Okay. And I can't guarantee anything down the road. Obviously, I wake up every day. I'm like, okay, rates are down, rates are up, whatever. I don't live by the rates. I live about making sure you're getting to the right product, the right home, and at the best time. That's my commitment to you, and make it as easy as possible. I always live by that. Make it as easy as possible. Okay. So I will say this: as buyer purchasing power is improving, working with somebody like me and a great realtor, we will help you get to your dreams. Okay. That's what homeownership is all about: owning the dream. And we will do whatever we have to do, whatever we can to help you. And if we can't do it now, I always tell people we'll get you on the right path. It's called the path to homeownership. And we'll get you on the right path to do all those things. So that way you're successful in your buying journey, and you're working with a great team that always has your back no matter what. So if you're wondering whether refinancing right now or buying makes sense for you, let's run the numbers together. Why not? It doesn't hurt. My team, well, right now it's just me, but at Anchor Home Loans, we do free analysis on all this. We don't have to pull your credit. We could do soft pulls so it doesn't affect your credit. But our job is to make sure, between me and my loan officer partner, Tiffany, that you're prepared and making the right decision to get into the home of your dreams for your family, for yourself, whether it's a first home, it's a second home, it's a primary home, whatever it is, investment home. You're looking at cash flow. I'm also own an Airbnb, so I'm very fluent in that and how to run a business with real estate. So anything that you need, we're here. But thanks so much for tuning in to another episode of Real Talk with Matt. And don't forget, please subscribe to my YouTube if you can, or if you found any kind of information valuable in here, share it with a friend. It goes a long way, keeps me motivated to do these videos. And thank you so much, and we'll talk soon.